We have seen the most aggressive rate hiking cycle in the US, and after that, the stock market still going all-time high. Right? We have seen the Federal Reserve has been running quantitative tightening, right? Which means sucking the liquidity out of the economy, at least from the US economy. But the stock market is ripping higher. We have seen the all-time high records have been broken by S&P, Dow Jones, and Nasdaq, as well as the Bitcoin has also broken its previous all-time high. Why the markets are ripping higher while the quantitative tightening is in process, while the US money supply is not growing anymore, right? It's almost flatlining since its decline last year. Why the markets are still ripping higher? Well, let's dive into it. So recently I have come across something called global liquidity indicator, and that actually measures the global liquidity in the global monetary system. You see, each time we, like average investor, look into the US money supply, we look at the US M2 money supply and try to predict if the money supply in the US domestic economy is growing or not. If it is growing, that means it is going to likely drive the asset markets, especially the riskier assets like Bitcoin, Nasdaq, and S&P. But recently, when we looked at the US money supply, we realized that this is not growing anymore. Yes, we saw a big uptick in 2020. It reached its peak in 2022, but since then it has been declining, right? It declined in 2023, and then from there onwards, it's kind of, flatlining since then. So that shows you the money supply in the US domestic economy, it's not growing anymore, right? It is flatlining. And if you look at the treasury market, we can see that the debt market is still exploding higher. So that means the US government still issuing more debt, which means injecting liquidity in the global monetary system. This explains that this new money supply being added into the global monetary system, that is likely to be the factor behind this market appreciation. Because remember, the US Treasury market is the bedrock of the global monetary system. So when the US government is still running massive fiscal deficit, which means it is injecting liquidity in the global monetary system, that is going to send those newly printed dollars somewhere. Okay, it could go into international markets or into the wars like Ukraine and Israel, but also it can return back into the US asset markets. And this is, I think, what's happening here. So if you look at this chart, that chart shows you the correlation between the US yield curve, the US Treasury yield curve, which is the difference between a 2-year Treasury yield and 10-year Treasury yield. The black line actually shows the yield curve here. The orange line is showing you the US domestic money supply. And you can see there is a strong correlation between the two. So whenever the yield curve gets inverted, we see the US domestic money supply also contracts. Okay, and it bounces off when the yield curve bounced off as well. So when the yield curve gets uninverted after its low, then we see the domestic money supply also bounce back and then right along with that. Now, the other important piece I want to show you is the correlation is basically the global liquidity indicator. So basically the global liquidity cycle. And you can see it is plotted between 1965 all the way to right now. Okay, and you can see that this global liquidity cycle is very harmonized. And after every 5 to 6 years, this cycle repeats itself. So it goes up, it goes down, it goes up, goes down. Every 5 to 6 years, it repeats itself. So the author of this blog actually tried to correlate this with a sine wave, and that sine wave is repeating every 5 to 6 years, and we can see that each time it is trying to fit itself very, very precisely. Yes, there was some discorrelation in 1996 and between 2000, but other than that, this has been perfectly aligned with this 5 to 6 year cycle. And what we can notice here is this global liquidity cycle is just coming off from its previous low. Its bottom was somewhere around 2023. And if you remember what happened in 2023, you have to look into the Bitcoin price chart. And that tells you that Bitcoin price chart was kind of flatlining or moving sideways up until like October 2023. And since then, this Bitcoin price just took off, right? So a lot of economists are pointing Bitcoin as a canary of the coal mine. So whenever the global liquidity unleashes in the global monetary system, Bitcoin is one of those riskier assets that takes its heat. Okay, so whenever the global liquidity pumps into the global monetary system, Bitcoin is the canary of the coal mine. It's the first of those riskier assets that takes off. Okay, even before Nasdaq and S&P. I'll show you another chart which basically gives you the correlation between the Bitcoin price appreciation and the global liquidity cycle. So that tells you that how correlated it is with the global liquidity index. Whenever we have seen the global liquidity is appreciating, it also pumps the Bitcoin price, and when it goes down, it also takes the Bitcoin price along with that. So what does it tell you? It tells you that the global liquidity is exactly pumping the riskier asset markets, not the US domestic money supply, it's the global money supply. Okay, so that means the money coming from offshore like Japan or Chinese investor or European investor, African investor, Asian investor. So those investors are trying to chase the maximum returns, pumping their liquidity into these asset markets, while the US Federal Reserve is trying to control it by sucking off the liquidity from the US domestic market. So if I have to predict what's going to happen next, I look at this chart and I can see if history is a teacher, then it means the global liquidity cycle is just coming off its recent bottom and it is going to further go up. And according to this cycle, it's a 5 to 6 year long cycle, and it will likely to reach its peak in September 2025. Now, previous success is not the future guarantees, right? But it is a very close correlation between the global liquidity cycle and how it is pumping the asset markets. And given all the economic indicators which is showing the recessionary signals, right? We have seen the yield curve is still uninverted. We are seeing the job losses happening, the unemployment is picking up, the inflation is still high, but yet we are seeing the asset markets are ripping higher. So does it mean it is going to continue? Well, as per this chart, it looks like it is going to continue until such time when the global liquidity start drying up. When this will happen, I don't know. Maybe in September 2024, maybe before that. Who knows that? It's impossible to time the market. The experts can only predict as close as possible. But anyway, this information is going to give you some hopes that you can still ride the wave before they pull the rug again and remove the liquidity of the global monetary system. Anyway, you let me know, how are you running your portfolio? How are you diversifying your investment and leveraging this information to go after the riskier assets? If you are new to investing, check the links below where I have some referral links which will give you extra free credit if you sign up for it. There's a Questrade link down there. And if you like this video, give me a thumbs up and subscribe, and I'll see you in my next video. Bye. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later. Sorry for the interruption, guys. Just wanted to let you know that we have a team of realtors which is covering the entire GTA as well as some outside areas as well, like Brent region where I am based off, and I help out the clients in this region as well. So if you have any needs with regards to real estate transactions, buying, selling, investing, renting, let me know. There's a link down there where you can book a one-to-one consulting call with me, and we will be more than happy to help you out. Let's get back to the video.